Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar price action continues to weaken against its rival, the US dollar, which remains close to the 18-month highs during the previous week after peaking at 97.42. It did pare back a little bit of its gains, but however still remains above the 97 handle at 97.12. On Sunday, China released data that showed the Manufacturing Purchasing Managers Index, the PMI, was 50.1 and the non-manufacturing PMI was 51.1 in January, both relatively respectable numbers. With another busy schedule on the economic front, all eyes turned to the RBA this week for their monetary policy meeting on Tuesday, as investors are expecting an announcement to end its quantitative easing program, while a rate rise isn't expected. However, the RBA could hint that one in the near future could be on the cards, as many top economists are expecting a rate rise in August and also posted in October as well. Then later, the central bank's Governor Phil Lowe will speak on Wednesday and a statement on the monetary policy will be released on Friday. So looking at the technicals, the market is attempting at present to reclaim some of its losses from Friday. However, I do feel the market towards 70.65, which is about 35 points away, may actually fail, with a cap seen around 71.20.30. Overall, I believe the broader picture is still very much in focus, which is down towards the 68.5 region. Moving on to the euro. The euro ended the Friday session on a mixed tone. As I mentioned, the US dollar did sort of pare back its gains from an 18-month high and sitting around 97.12, has posted a long-legged doji on Friday, which gives some indecisiveness when it comes to the challenging that bottom side of the range around 111 the figure. This was the overall objective. We've reached it, but the market seems to be holding respectively here, even though the ADX is somewhat holding to a bear case, while the RSI has bounced slightly from the oversold zone. Still, from a technical point this week, I'm looking for a potential move through 111 and down towards the region of 110.45 to 109.80. And on the cards, a break of this level would give a broader aspect to 107.50. 80 area. Dollar yen, although mixed on Friday, has recovered some of its losses and still holds a potentially a bull case to the top side of its range, seen around 115.90 figure. I feel the market will reject there and maybe even see a display back towards the 114 region as the overall up and down break the trend, and now this up move is nearly coming to its end. Sterling showing a little bit of respect when it comes to 133.5, and therefore in view of this week's risk is that the market is looking to the Bank of England when they meet on Thursday. It is widely expected that they may lift their rates for the second time as the country's inflation surged to its highest point in nearly 30 years, and the central bank has phased out some of its stimulus policies since the start of the COVID-19 pandemic. Overall, though, as I was saying before, I thought the market could get to around 134.35, but it's overshot itself, but now seeing a recovery. And therefore, if we see a break above 134.60, could ignite the move up further to the region of 135.15 to 135.70. Another choppy price action for CAD Yen, but I feel the market is going to fail again, and most probably from the technical point, not sustain as the MACD is negative and move back towards the challenge of 89.60.80. Gold is weaker and continues to remain that way since the last 3 trading days. We did break the level of 1,788 but closed above it on Friday. Nevertheless, we're still seeing tests towards this level and still remains vulnerable as the ADX is strengthening to a bear case. I feel the market could drop down towards 1,757 to 64, where the base is as a broad term, and see if the market respects this level. Finishing up with oil, keep an eye on this pattern, because if we post another doji, that's 3 in a row, and that's known in technical terms as a tri-star. It's when the pattern forms with 3 consecutive doji candlesticks that prolong the trend and may signal a reversal. So keep an eye. If we do get a close from New York tomorrow, another doji, then I would say that the TriStar has set the scene for another slide towards 80.80 as a potential target. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. Hope you enjoyed the great start to the new week.